One of my favorite day trading strategies is one that you've probably already heard of and maybe have even tried to trade for yourself, but you've most likely been taught to trade it the wrong way. The opening range breakout strategy, when properly traded, allows you to capitalize on very strong moves at the market open. So in this video, I'm going to be talking about some tips and tricks to make sure that you're trading this strategy the right way to set you up for success. First and foremost, for those that don't already know what the opening range breakout is, we're simply going to be looking for the first 5 minutes of price action to form after the market opens. That's going to give us our opening range. That's going to also give us our breakout entry level using the high of that range, and it's going to give us our risk level using the low of that range. The goal with this strategy is to capitalize on the breakout that follows, and we're going to have a relatively tight and small risk by using the low of that opening range for our risk level. And really, we can apply this strategy to anything. We can apply this to small cap stocks, we can apply this to large cap stocks, we can apply this to futures, options, and so on and so forth. But for me personally, I prefer to day trade the more volatile, higher potential stocks when it comes to this strategy. So for that, I'm going to be using my scanners here into the market open. And I want to see that a stock is gapping up strong into the open. It's going to ideally have a relatively low float. It's going to have strong volume. Another bonus would be that it is short sale restricted, because that would prevent short sellers from driving the price down lower and lower. I also would like to see that there is some kind of news or catalyst to push the price higher. Many of these stocks are going to gap up with no news, and ultimately that would just be kind of a pump and dump. But if they have some kind of strong news that's kind of backing up the move, then that would be something that would lead to a stronger opening range breakout potential once the market did open. So once I've used my scanners here and found these stocks that are gapping up into the open and kind of started to narrow down to a list of maybe 3 to 5 stocks with the best opening range breakout potential based on what I'm seeing in the news and what I'm seeing in their technicals, then that's going to be step number 1 to set yourself up for successfully trading the opening range breakout when the market does open. Now, I think that a common misconception with the opening range breakout is that if a stock doesn't run 30, 50, 100% above the opening range breakout level, then it's technically a failed breakout. When the reality is that most of these opening range breakouts are going to go, maybe 10 or 15% above their opening range breakout level before they start to come back down. And the outliers are going to be the ones that run 50 or 100%. So it's very important to secure your profits into those 10 and 15% moves. So that way you're not watching your winning opening range breakout trade turn right back into a losing one. And although this example here with GVH is not necessarily a home run, it is a good example of how important and how powerful it can be to lock in those quick profits when you do have them in an opening range breakout. So today, for example, we saw that this had a spike up in the pre-market session, came right back down, and we had some really nice consolidation here in the $3.80 to $4 range into the market open. So going into the open, I knew that this was going to be a candidate for a potential gap and go and a potential opening range breakout. And if we take a quick look over here at the Market Master Group, that's exactly why I included this here for our opening range breakout list with the opening range breakout level of $4.32. Of course, I got that level by using the high of that first 5 minutes of price action. So because this did have that consolidation, it did have that pre-market spike, it also is a relatively low float. It is short sale restricted for today, and it started to trigger that opening range breakout. That is exactly why I decided to buy into this breakout. And I got in at a price of $4.38, I believe, just above that opening range breakout level. And we can see it ends up getting a quick push up here into the $4.90 level before starting to come back down and started to form a little bit of a trend higher since then. So I locked in a quick $250 profit on this trade, a relatively small profit from a relatively small position size, but nonetheless, if you do this consistently, $250 per day is $5,000 per month. And that's kind of going to lead to the next important part here when it comes to trading the opening range breakout, which is going to be to make sure you're paying attention to key levels even on the longer term time frames. So for example, with GVH today, if we take a look at the pre-market session, we have this high back here, and we can see there is a little bit of resistance right in this 490 area. We have some more resistance all the way up here at the pre-market highs of about 530. So that's exactly what led me to secure some of my profits into this quick spike that we got after that opening range breakout was triggered. I knew that there was that pre-market resistance, and I knew that I wanted to be taking some risk off of the table into that resistance area. Now, to take it a step further, if we look at the daily chart, I always advise traders to look at the daily chart, look at the weekly chart. Even if you are doing a shorter term trade, these longer term time frames can show you where a lot of key areas are going to be, and those key areas can turn into resistance, and that's often where you want to be locking in your profits for the trade. So again, with GBH, we have that $5 area acting as resistance on the daily chart. We also can see around 550, some daily chart resistance, and then there's some more up here if it were to happen to move up to $6 or $6.50. There would be some more resistance in that area as well. But knowing where this resistance is on the longer term time frame can be a game changer that many traders do not look into, and ultimately it's going to allow you to find the spots that you want to be locking in some profits on the trade to make sure again that that winning trade doesn't turn right back into a losing trade. Now for this next tip, I wanted to head over to Microsoft to show you that this applies to not only small cap stocks, but you can also apply it to large cap stocks as well. And what we want to do for this next step is to drop down to a lower time frame. Yes, that means that we're paying attention to really all time frames when you're trading this strategy. Even though you're using the 5-minute chart to identify your opening range breakout level and your risk level, you still want to pay attention to those longer term time frames for key levels. And you also want to drop down to a lower time frame, like the 1-minute chart, in order to get a more precise entry point. So with all of that being said, if we look at the market open here, we can see that on this 1-minute time frame, we have 1, 2, 3, 4, 5 candles here, which is going to make up that first 5 minutes of price action. And this is exactly how we're going to identify our opening range breakout level, and also how we're going to identify our risk level for this trade. Now, if we're looking at the 1-minute chart, what we can see happen here is that this pushes right through that opening range breakout level, and the next couple of candles, this is very important, it comes right back down into that breakout level, turns it into a bit of support before starting to move and form that next leg up. This is exactly what I want to see on a lower time frame when I'm trying to take advantage of these opening range breakouts. And this is something that you're going to miss a lot of the times if you're using just the 5-minute chart or a slightly longer term time frame, because you're not going to see these candles come back down, test that breakout level, hold it as support, and start to set up for the next move higher. So by catching this opening range breakout in Microsoft, you would have been able to buy into this right at about $358. You would be risking down to about $355.50, so about $2.50 or so. And you would have been able to capitalize on almost $15 of upside potential, even with just a $2.50 per share risk. So this goes to show how powerful this strategy can be, whether you're trading small caps or large cap stocks. Just make sure that you pay attention to the tips that we talked about in this video, making sure to stack the odds in your favor with better stock selection, making sure to pay attention to the longer term time frames as well for key levels, and then dropping down to the lower time frames like the 1-minute chart to make sure that you're getting more precise entry points and higher probability setups for this opening range breakout strategy. Now, if you found some value in this video and you want to learn more about this strategy and learn our other trading strategies that we teach all of our traders at Master the Market, the day that this video goes live, we're currently running a 30% off sale at Master the Market. That's going to get you a 30% discount on the Day Trade Bootcamp, the Swing Trade Bootcamp, the Market Master Group, which is going to have trade alerts, group chat, and access to our live scanners. All you have to do is sign up using the link down below in the description and make sure that you put in the coupon code July 4th. That's going to save you 30%. This is a limited time offer, so if you're interested, make sure to come join us today. Thanks for watching though. I hope you found some value in this video, and if you did, please make sure to give it a like and subscribe to the channel. Until the next video, thanks for watching and good luck with your trading.